Mesako Limited, which is a partner with a remedy for financial security, we are going out of our way to look for top-notch expertise on subject matter that touches on money, and then we bring them to engage our members constructively in such a forum. So this evening, we are lined up a very interesting series of talks on debt and financial management, which we are going to roll out over the next 1 or so hours. To get us going, in terms of, we have the chat box where we'll be able to post our questions and answers in the chat box. In case you want to raise an issue and be given the mic, you'll be able to raise your hand and lower your hand. I think you can see those signs at the bottom of the page. It will allow you to be able to do that. So without taking too much time, allow me to invite our principal officer of our in-house insurance agency, an expert with a lot of experience on insurance matters, to curtain raise for us this evening. That is Ms. Monica Macharia. Please talk to the members. Thank you.
So good evening, members. My name is Monica Macharia, and I'm going to take you through our Old Mutual Doctors Medical Scheme. And this is the highlight of our Old Mutual Doctors Medical Scheme. Of key to note is that we have partnered with the UAP for the last 10 years, providing superior benefits at affordable rates with no waiting periods. We have inpatient benefits, which is the main cover, but you can we have the inpatient benefit, which is the main cover. However, a member can add both maternity and outpatient, which are optional. Medics, their families, relatives, and their employees are eligible to join our scheme. On when the cover runs, it runs from 6th of June, from 7th of June every year, running to the next year up to 6th June. And we have a 1-month window period for doctors to join. That is between 7th of July up to 7th of June, to 6th of July. That is a 1-month period. Eligibility to join the scheme, you have to be between 0 to 64 years of age. But if you're within the scheme, you are covered up to when death occurs, or you're covered for life. For the dependents, they include your spouse, your own children, legally adopted children, the foster children, aged up to 18 years. But if you have kids who are below 25 years and they're still in college, provided you give us a proof of schooling, they'll still be covered within the scheme. So these are the services which are covered within the inpatient benefits. That is the bed charges, the doctor's fees, physician, surgeon, and anesthetist fees, ICU, HDU, and theater charges, drugs, dressing, and internal surgical appliances, pathology, X-ray, ultrasound, ECG, and all CT scans, MRI, and PET scans, radiotherapy and chemotherapy, inpatient physiotherapy, emergency road and air evacuation, subject to overall cover limit, daycare surgery, that is for the, you have a scheduled admission for a minor surgery, and the home nursing care. This is like an explanation of how our inpatient cover is structured. These are the overall cover limits. We have benefits for the inpatient running from 500,000 for the lower limits up to a maximum of 10 million for the higher limits. For the bed charges, for those who are between 2 million and 10 million, you are covered for up to a standard private room, up to a maximum of 20,000 per day. While for the members who are below 1 million, that is 1,500,000, you'll be covered in a general ward bed up to a maximum of 11,000 per day. For the lodger fees, this is for the a parent accompanying your child in case he or she is admitted. They are covered within the inpatient, and the children are covered up to 12 years of age. For the emergency evacuation that is within East Africa, we have evacuation facilities both for air and road ambulance. Acute illness and accidents are covered within up to full inpatient limit. For the pre-existing conditions and the chronic conditions, for the category A to C is for those who are between 5 million and 10 million, you'll be covered up to a sub-limit of 10% of your inpatient limit. For D to G are those ones who are between 1 million and 4 million, you'll be covered up to a sub-limit of 500,000. While those who are for the category H, that is a limit of 500,000, you'll be covered up to a sub-limit of 150,000. For the HIV benefit, our clients enjoy a HIV benefits, and it also offers a supply of 1 month of the ARVs at discharge, and this is covered up to a sub-limit of up to a maximum of 5 million. For the organ transplant, is covered for the categories A to D. A to D actually is 4 million to 10 million, up to 650,000. For category E to H, that is 3 million and below, you'll be covered up to a maximum of 400,000. Of key to note is that within the organ transplant, what is excluded is the cost of donor is excluded, and the securing of the organ is also excluded. For the newly diagnosed chronic illnesses, these ones are covered up to full limit of your inpatient, but up to a maximum of 5 million. Psychiatric and psychological illnesses, depending with your limit of your inpatient, 10,600,000, 7.5400, 5,300,000, 4,300,000, 3,250,000, 2,250,000, 1,200,000, while for the 500,000 inpatient will be covered up to a sub-limit of 150,000. For the post-hospitalization, that is up to 25 days after discharge, you are covered up to a maximum of 25,000. For the congenital conditions, these are the conditions that normally affect the babies immediately they are born upon after discharge. Maybe due to maybe they are born when they are premature. They are covered up to a sub-limit. For those ones who have a 10 million limit, they are covered up to 600,000. 7.5 million are covered up to 400,000, 5,300,000, 4,300,000, 3,250,000, 2,250,000, a million up to 200,000, while for those with 500,000 are covered up to a sub-limit of 150,000. For the neonatal and prematurity conditions, these are still for the children who are born prematurely, provided the child has not been discharged from the ward, or if they are discharged, 3 days have not lapsed from the day they were discharged. They are also covered up to sub-limits, and the sub-limits are still the same sub-limits as for the congenital conditions. For the non-accidental, dental, and inpatient limits, these are covered up to a sub-limit of 200,000. For the non-accidental ophthalmic inpatient illnesses, which includes the cover for laser treatment, is covered up to a sub-limit of 200,000. While for the accident-related dental and ophthalmic treatment, these are covered up to full inpatient limits. For the external medical supportive appliances, these are like the wheelchairs. They are covered up to a sub-limit of 150,000. Last expense, this is the funeral expense cover, is covered up to 100,000 per person. For the passive tourism and PVT are covered up to a sub-limit of 500,000. Home nursing, these are subject to pre-authorization up to a sub-limit of 500,000. For the first ever emergency CS section, these are subject to a condition of sub-limit.
You are not given a link for the webinar?
is subject to a condition sublimit of 200,000. For the maternity complications before and after delivery,
how are your savings? You're doing well.
provided this benefit
Have you ever
applies.
taken a loan?
Only when for the maternity complications before and after delivery, this one is covered provided the maternity is purchased, and a separate pre-authorization has to be sought, which is outside the maternity benefit. And this one is covered up to a maximum of 200,000. But for the people who have an inpatient of 500,000, that is the category H, it is covered up to a maximum of 100,000. And the reason is for this is because maternity is covered within the inpatient limit. For the ambulance services, that is for emergency cases only, it is covered subject to pre-authorization. So this is our rates. The rates are depending on the on your inpatient limit and the family sizes. So that is how the rates are distributed. Of key to note is that we have a COVID-19, which is embedded within the inpatient limits. And for those who have a limit of 10 million for their inpatient, they have a COVID of up to 3 million. For those with 7.5, the same up to 3 million. Actually, it is between 4 million to 10 million, you have a COVID-19 of 3 million. While for those ones who are 2 million, have a COVID still up to 2 million. 1 million, a COVID-19 of up to 1 million. But for those ones with 500,000, you have a COVID-19 up to 500,000. So this is a schedule of how our rates are distributed. The rates actually are dependent on the age and your family size. So these are also the rates for those ones who are 60 years and above. For the inpatient, the distribution is also from 500,000 up to a maximum limit of 10 million, and also the COVID-19 limits, which are still embedded within the inpatient limits. So this is the maternity cover. Our maternity cover will cover for the normal delivery, elective CS, and subsequent CS sections. It also covers maternity-related complications, unless a separate maternity-related complication benefit is purchased. For the maternity and first ever CS, the benefits are mutually exclusive. So for the normal delivery, elective, and subsequent CS, we have up to a limit of 100,000 per family. And this one is for the principal member and spouse only. So this is a schedule of benefit for our outpatient. Our outpatient, we have up to a maximum, up to an overall limit of 150,000, which is shared per family. Of key to note is that for those members who have purchased an outpatient cover, you have a medical checkup for the member and the spouse, up to a maximum of 10,000 per family per year. And the medical checkups, the services that you can seek are for the physical examination, urinalysis, hemogram, blood sugar, ECG, lipid profile, and pap smear and mammogram. Those ones are for the screening of the cancers. For the pre-existing and chronic conditions, illness, including HIV, cancer, and diabetes, all these are covered up to full inpatient limit, and also ARVs are covered. For the vaccines, we cover both the KEPI and the baby-friendly vaccines within schedule. For the supplements, these ones are covered, provided they have a direct action in managing the condition for which the member is being treated. And of key to note is that a pre-authorization has to be sought from the underwriter. For the external appliances, these are like the ankle braces, the knee braces. As long as they are medically indicated, they'll be covered, but a pre-authorization has to be sought from the medical insurer. So these are our rates for the outpatient. Also, the rates are dependent on the family sizes and the years. We have separate rates for the members who are 59 years and below, and for the members who are 60 years and above. And also the rates at the The very lower row, you can see we have our maternity rates. And of key to note is that for you to purchase a maternity cover, you have to have an inpatient of 4 million and above. So for the territorial remit, the Old Mutual has service providers within Kenya and East Africa. So we have service providers, Kenya, Uganda, Rwanda, Tanzania, and South Sudan, meaning with your UAP card, provided you're within these countries, you can get medical attention. In case of services which are sought outside these regions, or where maybe it's an emergency case and there's no any valid provider, UAP provider, your claim shall be settled on reimbursement basis, but it must be within the customary rates as determined by the UAP. Of this to note is that you have to claim within 60 days, and the claims, you have to submit your claim within 30 days of getting medical attention. For the overseas referral, key to note is that in case maybe you're suffering from a condition where you cannot be able to get medical attention within Kenya, UAP has credit facilities in India, and the referral must be approved by the company and the government department, provided it excludes hospitals from Western Europe, Australia, USA, South Africa, and Canada. Those are the countries where UAP has excluded credit facilities from. Where overseas referral are being sought, your airfare will be accommodated by your inpatient, from your inpatient limit. This is on an economic class, but for your accommodation and taxi costs are excluded. For the airfare, you have to pay at inception, and then you at some, if UAP sometimes is able to. A key to note is that it is the lowest will current. End of my presentation. Our lines, our direct numbers that you can reach us through, including our email. Thank you.
Thank you very much, Monica, for the presentation. I know we are going to the next main session, but before then, there are a few questions in the chat box that maybe we could go through for the next 5 minutes before we invite the next speaker. So the first question, JN has just said, wow. I don't know whether that's a question or what, which didn't complete, but the next one is Dr. Neema Lema, and the question is, do you cover for different therapies needed by children with special needs? And then the second question, Monica, these are all your questions, and we'll stop them at 7:30 so that we go to the next one. Why does maternity cover have a waiting period of 2 months? It means that since renewal is only at June, there is no maternity cover for everyone between June and August. Talking from experience, not an optimal product in my opinion. That's anonymous attendee. So Monica, as the expert, you can respond to those issues. There's another anonymous attendee still. There's another question, how much premiums monthly? You'll be able to take them next. Dr. Omondi Samuel says, is dialysis covered in both inpatient and outpatient? Those are the questions we have up to this point. So please respond to them before we move to the next session.
Okay, thank you so much, Dr. Gott. Yes, for the therapies, they are covered. This one's for you to be covered at the therapy. It can be covered in 2 ways. Maybe you'd be in an inpatient facility, it will be covered under that. But if it is for maybe the people who have certain conditions and you have to go for therapies, you have to have an outpatient cover, because that one will be covered under the outpatient cover. And for the maternity, the reason as to why we have a 2 months waiting period is because as much as we are saying that this scheme doesn't have a waiting period, maternity, we can't say like it is an emergency. This is something that you already have known or you are planning to have. And that is the reason as to why there's that a 2 months waiting period. And if you are joining just a normal medical cover, actually the waiting period for maternity is normally 1 year. So when we say our waiting period for maternity is 2 months, we have really waived at least 10 months for the members. So it is an optimal product for the doctors. The other one, whether dialysis is covered, yes, it will be covered because that one will be covered under the chronic conditions. So, but of key to note is that it will be covered up to a sub-limit depending on your inpatient cover that you have purchased. If it is an inpatient case, requiring dialysis, or if you are requiring dialysis when you are in a ward. But if it is for the scheduled dialysis sessions, yes, you'll be covered, but you'll be covered up to 150,000. That is the maximum outpatient limit. For any other cost that you'll incur above 150, unfortunately, you may have to cater it from your pocket. I don't know, looks like, I don't know whether
Okay,
I've answered
thank you, Monica. There are many questions. I would like you to take them down because we want to switch to another topic. There is a Dr. Anthony Rungu. You will be able to follow his question on glucometer. Anonymous attendee again. Why don't insurance companies cover for family planning and cervical cancer screening? You will notice that we'll take it at the end. Dr. Bernard Abwoga, does insurance cover for treatment in Turkey? You'll be able to comment on that. And anonymous attendee again, are those who are not health workers eligible? You'll be able to respond to that. Now, I request that we switch gears to the main presentation of this evening, which is on debt and financial management. And as I had said earlier, we are indeed very honored to have in our midst a life coach, a life skills trainer, and a consultant who is by name, he's called Mr. Roy Okonji. Roy Okonji, I watch him a lot on YouTube. He has a lot of wisdom on money management on YouTube, and I'm one of his biggest fans. So today I would like us to listen to him talk to us live. He's a life coach. He's a debt and money management coach. He's a corporate trainer. He's an author with about how many titles? 1, 2, 3, 4, 5, 6, 7 titles. Maybe he'll be able to tell us the story behind each of the 7 titles. And Mr. Okonji, it's a big honor to have you talk to the members of the Kenya Medical Association regulated non-withdrawable deposit taking Sacco Society Limited. That mouthful of a name came with us joining the SASRA fold. So I hope you don't run out of breath as you try to pronounce it in full. So let's all welcome Mr. Roy Okonji to talk to us this evening. Karibu.
Thank you so much. Thank you so much, Dr. Gott. Please confirm that you can hear me and you can see my screen.
Yes, I can see your screen. In case there's a problem with the audio, I'll be able to tell you. So for now, there seems to be no problem. Karibu.
All right. Thank you. Good evening. Don't know if we have people joining us from zones of good morning and the other forms of greetings, but I'm so honored to be part of you this particular moment. I am very glad to be part of this group. I don't take it for granted. Thank you so much, KM Mesako, for allowing me to be part of your story this particular moment. I was with some of you last year during your member education day, and we commenced a conversation and we covered it to a certain point. And I'm so excited that we have gathered here to reflect on our money situations. So this conversation is going to be as real as possible, as practical as possible. And I want to believe that at the end of the session, both of us will have learned from one another.
We are just requesting that everyone who does not have the mic, please mute yourself, and also our admin to mute anybody who is not the speaker. Thank you.
All right, thank you so much. All right, so today we just have a few objectives to achieve. First is to appreciate the basics of money management and wealth creation. Then we'll also seek to understand the essence of debt and debt management as a very important part of personal financial management. And then also to appreciate practical money management measures, especially during tough economic times, like the times that many people have found themselves at a time like this. Right, so I saw it wise to just highlight a few things that we spoke about last time, to also just bring to speed some of us that were not there, because it forms part of the foundation of what we are talking about this particular time. So last time I opened the conversation by sharing about some things that I call realities of money. And I was saying that in the world of handling money, each one of us handles their money based on how they think about money, based on how their mind is wired around money. And the wiring is a product of our upbringing, of our education, of the knowledge that we have, the society where we find ourselves, the environments and things like those. So I came up with 7 things that I call realities of money, very basic things, to just help us begin to probably look at money a bit differently. And I shared these 3. The first one that I shared was that money is powerful. It's a very basic thing. We all know that money is very powerful. Money gives us options. Money helps you consider either this or the other. When someone does not have money, when someone is broke, their life is usually very linear, very straightforward. You don't disturb us when you do not have money. And forgive me, because in my conversations, I like using the pointer you. So if I say you and it does not apply to you, just bring a neighbor who is not here, to pick it. But money is very powerful. But the essence of this reality is not the fact that money is powerful, but to remind us that if you agree that money is powerful, please also agree with me that next time you receive your money, be careful how you spend it so that you can retain part of this power with you for as long as possible. Number 2 is that money is finite. The money that you have reduces as you spend it. Okay, normal expenditure simply reduces money. That is also another very basic statement. Okay, if you had 1,000 shillings, you and I know what happens these days when you get out 50 shillings out of the 1,000 shillings. You know what happens to the remaining amount. Okay, so money reduces as you spend it. But that is not the point. The point, and before the point, the reason I thought about this reality is after observing how some of us behave when we have earned money. Some of us, after we have earned money, we will grow wings, we will fly very high, we will do a lot of things in a very short time. And before long, we have 27 days looking at us, and probably the money that we had is finally gone. And so the point is, if you agree that money reduces as you spend it, then please be careful next time you receive your money to approve expenditure that leaves you with value. Okay, because it is obvious once you spend, it is gone. So let it go and leave you with value and not regrets, because sometimes we find ourselves regretting that we spent our money the way we did. Okay, so let us just be careful next time we receive our money. Then thirdly, and which I want to build on this evening, was a reality that was saying there is no small money. There is no small money is perhaps one of the most powerful realities amongst the 7. And this reality is not to mean that your money cannot be small if you compare it with another person's money of a bigger number. That we all know is possible. Your money will look small if you're struggling with debt. Your money will look small if you spend without a plan. Your money will look small if you compare it with a number bigger than the money that you currently receive. But the point here was about a weakness that many human beings have of demeaning their income, demeaning the money they have. Very many people speak smallness upon their income. You hear people say, haka kamshahara ketu, you know, this little money that we earn, these peanuts that we earn. Okay. And the danger here was the fact that the moment you get used to demeaning your income, then you begin to put some mental lock on yourself. Therefore, we do not expect your mind to give you great ideas that can be executed using money that you have called small. Sometimes I have imagined that in our heads, there is a committee. Some thoughts are about to be given to you, and then your thought system reminds itself that this guy has told us that his or her money is still small. So let's wait for the day he or she will come and report that the money is now enough. And then I keep asking, so how much money is enough? And when is it going to come? And who promised you that kind of money will come? Do you even know the exact amount that you want to regard as big money? So the essence of this reality is to remind us that we should be willing to start doing whatever we can do with our money as it is now. We should begin to allow our money to do the most it can do today, to empower it, okay, so that it can do more than it has been doing when we were not living consciously. Now that we want to get deliberate, then can we allow our money as it is? And then can we now begin to also learn not to continue demeaning our money? And that time I also shared a story of a friend of mine who was able to put up a house when he was earning a salary of 2,000 shillings per month. A very true story that I had to follow up to do the calculations to see it makes sense. I even had to travel to touch the house just to see that it is not a theoretical story. Okay, the reason I share that story and many times I have shared is because when I'm doing pre-retirement conversations, a lot of times I encounter cases where people confess publicly that they are worried. Some of them even shed tears in class that they are going into retirement 1 year from the time we are meeting, or 2 years, or some months, and they don't even have a grass-thatched house to call their own. Yet they've been earning many multiples of 2,000 shillings every month. Of course, I share that story not to ask you how much you earn. I don't share the story to ask you how many multiples of 2,000 shillings you earn. Neither do I ask the question to share the story to ask you whether you have a house. But I share the story to ask you, how many ideas have you been shelving because you're waiting for big money, because you're waiting for enough money? All right. So I just saw it important that I also brought this up, part of what we shared last year. Someone else might pick, so that as we progress, then you have some foundation of what we are talking about. Away from the realities of money, I also shared about wealth creation. And I shared what I call the focused wealth creation cycle, which is the triangle that you can see. This is a cycle that I came up with some time back after I got bothered with wanting to understand how come there are some of us who will keep working, we earn money, but we just keep living a life of hand-to-mouth kind of life, or some of us who will try to save some money, but that is where the story ends. How come when, for example, things like COVID have hit, there are some people who are worried because they've been a hand-to-mouth kind of person and there is a lockdown. Therefore, there is a threat that they will not be able to survive, because any day that they don't get out of their houses, then they are likely not to have something, to feed themselves or their families with. Yet, there is also another person in a similar setting. Their worry is not about the food they will eat. Their worry is not about how long COVID will last. Their worry are other things, but not those basics. And that's how I got interested in just wanting to understand a few things about wealth creation. And that's how I came up with this particular triangle. And allow me to just also brush through it, because I'm sure I might be speaking to someone, and this will also build into the next sessions, segments of my presentation. The story of wealth creation begins in the first box, the box at the top, the box that I'm calling the money acquisition and management box. This is the box that receives our money when we earn our salaries, when we receive our profit. For those that have businesses, it gets into that first box. It's the box that acquires money. It's the largest box in terms of composition. Anyone who wakes up in the morning and goes to do something and gets something in return is in that first box. So in terms of the numbers, it has all the numbers, everyone who wakes up to do something. However, many people do not realize that there are other two boxes in that journey of wealth creation. So you are supposed to handle your money with a lot of caution in that box, so that the money not only sustains you, but a portion of it is allowed to be retained to become seed for future multiplication. Indeed, that which you retain is the only money you can call yours. I know many of us would call our money, the salaries that we earn, our money entirely. But the truth is that that is not wholly your money. And I'm sure some of you have heard me argue that money that you can call yours is money that you have absolute power and control over. You can change your mind about that money. It was money you wanted to use to buy a car. You can wake up and say, I'm not buying a car, I want to buy another item, and no one will have trouble with you. And so I keep asking, can you say that with money for food? Can you say we are changing our minds about food money? We want to use this money for food for the next 1 week or 1 month to do another thing because you call it your money. Can you afford to say that with the money for rent if you live in a rented house? Can you afford to say that with the money for school fees? Can you afford to say that with money for the basics? You realize it's not possible. In other words, then your salary account, your income account is only a conveyor belt. You know, the money comes, but it's going to hands that are already predetermined. So the only money you can call yours is money you choose to retain. And that takes us to the second box, the box below, the box of money retention. And we begin to retain money through the process of saving. And this is where KMA Circle plugs in, to help you achieve the objective of retaining money that you will call yours. And congratulations for choosing to join the circle, because then you have been a saver. You've been retaining money that you can call yours. If you are saving so that you can buy a cow, you can change your mind and say, I don't think I need a cow now. I think I can use this particular money to buy another item, and we will not have trouble with you. Okay, so that's the box of money retention. Then I come in to disturb you a bit by reminding you that no one ever became wealthy by saving alone. So saving is an important part of wealth creation, but it is not the final part. That there is nothing fancy in sitting on money, looking at it and just being happy that your money is still there, it is still intact. You check your bank balance and you're okay. Money needs to be sent to call for more money. And this is where we remember we were retaining seed for future multiplication. The same way our parents would retain part of the harvest as seed for the next season, and they would retain it beforehand, before we would start consuming. Then when the next planting season comes, they have to plant it. So they send that seed to go and call for more. So we send our money to the third box, the box of money multiplication. And this is achieved through the process of investing. Gladly, the circle also can play both roles, can retain for you, and can also do some multiplication for you, some growth for you. And that is why at the end of every year, there's some dividends announced, and we pick them. And last year, I remember asking us, what do we usually do with our dividend money? And the challenge that time was, would you die if you chose to retain that particular money to be able to enjoy the power of compounding? So when you send your money to multiply, you are expecting something, and that thing has been called returns. Those returns go to pour back into box one, the box that receives money. Now, if you had one income called salary, now you'll have another income probably called profit if you invested in a business, or called dividends if you invested in this circle or in another business, or returns called interest. If you placed it somewhere, you gave your money to someone to use, someone who will give you interest, including the government. Or it might come carrying the name of capital gains, where you bought an asset at amount Y and you have sold at an amount Y plus A. And so the difference becomes your capital gains, and so on and so forth. In a nutshell, this is the process of wealth creation. It's supposed to be an ongoing process as long as we are active financially. The problem with, again, some of us is that we will play in this cycle, but when the returns come, we quickly adjust our lifestyle to swallow the returns. And so we are active players of the game, but we are mark timing because we are not allowing that particular process to continue as it grows. All right. Then we entered the conversation of debt management. And I mentioned that debt management is the process through which debtors seek to gain and regain control of their debt situation. And that definition has three keywords. There is the word process. So debt management is not an event, it's a process. As long as you have a relationship with debt, the process of debt management continues. Then there is the word gain. That means you are getting control from the word go. The world perceives debt management as a corrective measure. But I disagreed a bit with that particular approach because I strongly believe you begin to manage your debt from the time you conceive the idea of borrowing. If you get it right from the beginning, from the idea point to the process to the utilization of the money, then you have better chances of not having trouble with the debt that you get yourself in. And that's how I came up with two types of debt management: preventive debt management, all right, which is debt management before you get into trouble, before you start struggling. And at this stage, you are avoiding what I call borrowing blunders. You want to borrow right, for the right reason, to make an independent decision to borrow. You're not borrowing for other people. You're not borrowing to compete, to compare, to be like anyone else. You're just being you and doing you. Okay. And then there is curative debt management. That is debt management when you have started struggling. You've had probably a very good experience with debt. You have been repaying, but suddenly you realize you are now struggling. When it is repayment debt, maybe you don't have the installment ready or the entire of it as required. Okay, so that is when curative debt management is needed. And we spoke a few things about preventive debt management, and the only bit that we were not able to exhaust was the curative debt management. But I thought it is also good that I mention just what I've mentioned so that someone who was not there can also be brought to speed. Then I mentioned the reason we must think about debt management is because of a monster called the trap of debt. Your enemy has never been debt per se. Your enemy is the trap of debt. When you get trapped in debt, that is when your life turns upside down. I am very passionate about conversations of debt, and some of you who follow what I do, you may already be knowing part of the story as to why I am so passionate. For record purposes, I am the only award-winning borrower this side of the world. I hold a very expensive trophy that was given to me by one of my Shylocks for being the most trustworthy borrower, and for continued business. Okay, those of you who know who Shylocks are, I leave it to you to imagine how much business I had given them for them to sit down and decide to award me, for giving them business, right? But I have lived in the trap of debt for a long time, and I thank God for that trophy, because it is what opened my eyes. When I received it, that's when I started experiencing my turning point, asking myself, you mean I am being rewarded not for anything else, but for borrowing, not even from the banks or the circles, but from that other market? And I said that trophy will be something to be reminding me every day. And I placed it on my desk. I was still a banker then, for it to be reminding me of the journey ahead. And I started the journey of battling that particular monster, that particular time. But I thank God that we are now able to talk about it as we are doing. But when you talk about the trap of debt, the reason I make a lot of noise about it, the reason why I send a lot of caution about it, is because when you're trapped in debt, your life and every portion of it will be affected. Many times when I speak about work-life choices, what you fondly called work-life balance, I like dividing life into these 4 parts: your health, your relationships or your social life, your career life, and your financial life. Each of these 4 parts will not be forgiven when you are struggling with debt. Your health will be affected, every part of it: physical health, mental health, emotional, spiritual, will be affected. Your social life, many friends today don't see eye to eye. One gave the other money, one was not able to repay because of the challenges they have with debt. Families have hit rocks because of the struggles with debt. Careers will not be forgiven. If your career requires you to go and upskill, you don't have money back to school, and therefore you might be forced to stagnate. Your financial life might not make sense at all. You will be attending sessions like this and people are talking about savings and investment, but you're wondering, do people still save in this day and age? That is what the trap of debt will do to you. I'm just brushing through, but this is a very touchy conversation. All right. But it's important that we realize we have to be careful how we handle our money. When we decide to utilize debt, we have to be careful so that we don't find ourselves trapped in debt. Because I do not want you to be where I was. And I've said this on TV many times, that the first time the media came to cover my story, that was perhaps the first time people around me knew that I had been struggling. When I mentioned that the numbers that were surrounding my story, that is when a lot of people got shocked that I had been going through that phase. And many people suffer in silence. And that's why I launched what I call the Debt Clinic, which gives us an opportunity for a one-on-one conversation, for me to just be able to encourage someone not to think about suicide, because there is something that can be done about our current situation. And then I ask a very personal question: are you trapped in debt? Of course, I don't want you to answer me, but I want you to answer yourself. And it is at this point that we get to take what I call the debt trap test, a very simple test. I came up with very many indicators of a trapped person. And I would want us very quickly to also just try to do this test on our own, wherever we are. I just hope you can access a pen and a piece of paper so that we can very quickly run through the debt trap test. Okay, then at the end of this conversation, I will also very quickly turn us into financial experts. We will have a very small case study, and then we will draw some lessons out of it, and then we will be done for the evening. So I hope you have your pen and paper ready. I just want you to come up with a table like this. I'm not interested in the straightness of the lines. I'm interested with 3 columns. One column is numbered 1 to 10. There's another column for yes and a column for no. That you can do in a few seconds. So I'm just giving us a few seconds, kindly, very quickly. If you have pen and paper, I just want us to go to a moment where we can begin to examine ourselves. Okay. So I'm giving us a few seconds. Just do numberings 1 to 10, have a column for yes and a column for no. Don't struggle looking for a ruler. All right, we should be there. So what I'm going to do is that I'm going to read some statements. They'll also be projected here. If the statement applies to you, you tick yes. If it does not apply to you, you tick no. There'll be very basic statements. All right, statements I've taken time to observe, to look at myself, what I went through when I was in that struggle, and also many of the people that I've been able to work with to just help us be able to see where we are. At the end of the exercise, you will be having a table that looks like the table on your right. You will have some ticks for yes, some ticks for no. Then we will make some meaning out of it. So I hope we are good to go. So we start. Number one, if your monthly total debt repayment amount is bigger than your monthly income. In other words, you're expecting income of, say, 50,000 at the end of the month, but in total, what the people you owe money are expecting from you in the name of installments, not the entire debt amount, but the installments expected from you is bigger than 50,000 that you will be earning end of this month or whichever month. Please tick yes. Please tick yes. Okay. Number two, if any of your debts is in arrears of more than one repayment cycle. So you've had some debt from an individual, from the circle, from whichever other sources. If any of them, as you listen to me, is in arrears of one repayment cycle, that means if you are repaying monthly, and as you listen to me, you have 2 months arrears and beyond, please tick yes. If you took money from a friend and you promised to repay in 1 week's time, as you listen to me, you've done 2 weeks and beyond, please tick yes. Number three, if you often find yourself with a monthly budgetary deficit, if you look back 3 months, 6 months, you realize that most of the time, your money looks small. Your expenditure seems bigger than your income. Most of the time, please tick yes. Number four, if you routinely pay your bills late, for instance, you live in a rented house, the landlord wants the rent by 5th. But if you check backwards, you've been paying 7th, 8th, 10th, or even later. Sometimes you have to give stories. Please tick yes. Number five, if you are a frequent borrower of short-term debt is salary advance, short-term debt is Shylock loans, short-term debt is emergency loans, short-term debt is credit card, short-term debt is Shylock loans, short-term debt is those soft loans we pick from our friends and relatives. If you look back and you realize every month you have been on this kind of debt, please tick yes. Otherwise, tick no. Number six, if you neglect repairing or maintaining your assets that need to be repaired or maintained, please tick yes. Otherwise, tick no. In other words, if you have a car that, as you listen to me today, you've gone past the service time, probably you're on your second cycle or whatever cycle, please tick yes. If you have been carrying a cracked screen, a phone with a cracked screen for a very long time, please tick yes. Number seven, if you've been dodging calls from your lenders, they call you, you don't pick, they text you or you promise to text them back and you don't, please tick yes. Otherwise, tick no. Number eight, which I leave it to you to imagine why it is an indicator of a trapped person. If you hide certain bills from your spouse, please tick yes. Number nine, if you neglect replenishing your undergarment wardrobe. I know this one is touchy. It is out of all the indicators I have, I get a lot of inbox messages after sessions on this particular one. If you neglect replenishing your undergarment wardrobe, the good thing is that this is a personal test, so you know how they look like, right? So if you know that they are dilapidated, then please tick yes. Otherwise, tick no. And lastly, number 10, again, we're just doing this very fast. Those that were there last time, we did this and this is where we stopped. So I'm not really breaking down the indicators, but I just want us to go through the exercise. If you are adversely listed with CRB, please tick yes. All of us are listed with CRB, but some of us are what you call blacklisted, and others are whitelisted, so they can still proceed with borrowing without a lot of issues. So if you are adversely listed, please tick yes. Now do a total, get to see how many yeses you have and how many no's you have. Allow me to say, because you are now seeing your results, it is not automatic that if you have any yes, you are trapped in debt. However, if you have 4 yeses and above, it is a wake-up call that you need to give attention to your money story. Right, so let us pack that, okay, as you keep reflecting on it. And then let us very quickly try to talk about curative debt management. Curative debt management. We said preventive debt management is when you want to get it right as you are borrowing. So you're putting measures in place to ensure you borrow right reason, right process, you choose the right lender, and you consider all the factors that you need to consider. And then when the money comes, you're also disciplined to execute it as planned. But now curative, you are already there. For whatever reason, maybe some changes happened in your life and you have found yourself at a place where repayment has started being a problem. Then it is important that then we talk about curative debt management. I came up with a formula that I call the ADSA 4-stage approach, and I just want us to very quickly brush through this particular acronym as you reflect on your story. You may also use the same to help someone else. The first step in the process of curing your struggle with debt is acceptance. Acceptance. At this stage, you're speaking to your mind. You're convincing your mind that there is a journey you need to take. You're accepting that your past conduct with money has been wanting. You're accepting that you are not at your desired position. You're accepting that you are responsible for where you are. You're accepting that it is possible to turn the story around. And I assure you it is possible. You are accepting that it is doable, and you are the best person to execute this particular change. You're accepting that it's going to be a process. You're accepting that the best time to start that process is now. So at this point, you are speaking to yourself. You're making a decision. You are realizing that, hey, I'm coming from a very difficult place. I am currently at a very hard place, but I need to do something. And then the D is what I call the disclosure stage. This is where you come to terms with the depth of your mess. Who do you owe money? It's at this point that I give you the homework that after this session, sit down and do a listing of everyone you owe money and the balances thereof, so that you can have a moment to reflect on your story. I realize many times we don't have time to think about our stories. Okay, so that is what happens at the disclosure stage. Then we have the strategic stage. After you have seen the list of who you owe money, when I did my disclosure stage, that is when I discovered I was owing a multitude. Some of you have heard me say in the media that I was owing a record 86 lenders. And I don't mention this number for any reason, any other reason. I mention this number just to encourage someone else that probably at the time of listening to this, you are facing a rough patch and maybe you're on the verge of giving up. And maybe you're struggling with 2 people, 3 people, rather 3 lenders or a number like that, right? It is possible that something can be done about it. 86 is not just a number. 86 are pressure points. So at this point, we are asking ourselves, what is the way forward? And now at this point, we don't have a blanket solution to all of us. There are no identical human beings in terms of financial circumstances. So allow me to just share some tips at this point, which are general tips. The first thing you can do is to reach out to your lenders. You know, the ordinary person wants to run away from our lenders, right? But the psychology of lending is such that a lender feels good knowing that you have their interests at heart. So when you feel that you're beginning to struggle, don't run away. Reach out, try to explain some things. And while at it, number 2, you can choose to renegotiate. the terms of your debt, depending on where you had borrowed and the kind of debt that we are talking about, right? You realize you can't continue paying 10,000 per month. Maybe you can now be paying 5. Reach out and try to renegotiate. Number 3, you can also be able to check your budget. Look at how you spend your money. What is it that can be changed in your current budget? Are there things you can reduce your expenditure on? Are there things you can probably pause as you address the current situation that you have found yourself in? Number 4, you can also declutter. Some people have houses that are congested with things that play duplicated roles or things that you no longer use. All right. If you're not gifting someone, you can release them, sell them to someone who needs them, get some money that can help you do away with 1 person or 2 on your list of the people that you owe money. You can also consider consolidation. Probably you owe several people out there. You can consider a loan, that is friendly, probably a loan from the circle that will be friendly, and you use it to go and clear the other people. It has the chance of giving you a new lease of life on your payslip. It also has, the chance of reducing your pressure points. You begin to deal with 1 person instead of 5. This helped me a lot when I was beginning that journey of mine. You can also consider lifestyle adjustments. Sometimes you realize you are where you are today because you went ahead of the gun. You lived your life of the future before that future came. So a time might come when you realize there are some changes you need to make. You are currently living in a house paying rent of 100,000, but you went into that house to show some people that you have also arrived. Maybe when you check your life, you realize you can only probably manage a house of 50,000. That is a change that might need to happen. Then you can also consider gradual weaning. This is a method I give to people who are addicted to short-term borrowing. So you have these apps, you have salary advance or some advance loan or some short-term loan you pick from whichever source. Gradual weaning method is for those who have reached an addiction level where we can't just tell you to stop borrowing. Sometimes it's impractical to say, just stop, because someone receives their pay and they sink it into repayment fast before they can borrow to spend. For such a person, gradual weaning means if you have a limit of 10K, and you have paid, you don't borrow 10. You give yourself a reduction factor, say 500 bob. So you'll be borrowing 9.5. Next season, you will not borrow 9.5, you borrow 9, and so on and so forth until you read that particular debt off your list. It's a method I used to sort out my Mshwari back in the day, and it worked for me. I have seen it work for very many other people in the one-on-one setting. Then you can also think about extra income. What else can you do to make another coin? The skills that you have, the work that you do, whatever time, is it work that you can also do elsewhere during your free time to get another coin? Do you have interests? Do you have gifts? Do you have talents that you can monetize when you are free? It's a conversation that we all need to entertain. Then the last A is action. All these others, we are just thinking, we are deciding, we are picking what we can do, what we will do. Now we seal this deal by taking action. Roll your sleeves and be ready to soil your hands. That is the ADSA 4-stage approach. It is the approach I took myself through. I had not seen it that time. Later on, when I began doing this job, that's when I saw that actually this is the process that that I followed, and I'm glad that it has been able to help a number of people. All right. So as we process the situation of our debt story, and again, I like saying debt is like a loaded gun. Debt is not absolutely bad, neither is it absolutely good. Some of us will fear debt, but debt can also be a good catalyst of the process of wealth creation that I mentioned. So like I said, in that process, it does not really help to just keep saving and saving. Of course, when you're saving and saving, you're better than someone who is not saving. but you are not creating wealth. And debt can also be used as a tool of wealth creation. But I want us to help John. This is our last activity. The story of John is a true story. John is one of my clients after COVID-19. He allowed me to use his story to just sensitize people in terms of the choices we make. His true name is not John, okay? But the story as it is the story that John came with the first time he came. It got adjusted along the way when we started the real story. But I want us to just look at this story of John. It's a very simple story. John and wife were earning 100,000. John was earning 60K. The wife was earning 40. They live in Roysambu. They both were working along Thika Road on a straight line. They had 2 cars, both on loan. They had 1 child aged 2 years. When I asked them to do a list of their expenditure items, this is what they gave me. They shop at the junction, 15,000, rent for their 3-bedroomed house, 40,000, fuel, 12,000. The wife was doing beauty stuff, 7,000 in Kilimani. They had home internet, 20 Mbps, 6,000, and the rest, as you can see. Now, because of COVID-19 realities, John's spouse lost her income. Therefore, the family's new income was now 60,000, and John was under pressure. So John has approached you, and John wants you to help him. Very quickly, I just want us to do 2 things. 1, comment on John's life situation. What do you think about this life of John? What can you say about how John is running his life? That's number 1. And then number 2, what advice can you give John? If he approached you with this situation, what would you tell John? Right, I want us to use the chat box very quickly, describe the story of John, and then advise John. What would you tell John? Very quickly. I'm just heading to the chat to see what you are saying, but please describe the story of John and then say a word of advice to John. All right, the answers are beginning to stream in. John is living precariously. Thank you, Hazel. He's living above his means. Thank you, anonymous attendee. All right, we can use the Q&A. I meant to see that the chat is not enabled. We can use the Q&A, it's fine. John is living beyond his means. John is in a quagmire. All right, he's living beyond his means. He's in a debt trap. He needs to reduce his expenses. Yes. If you can mention exactly which expenses he needs to reduce, we will also be able to appreciate. He's living way above his means. His expenses are more than his income. He needs to be strategic and take immediate action. Right, please tell us which kind of action. Thank you so much. He should move to a smaller house of at least 20K. Thank you very much, Kevin. He needs to control his wife's expenses. Thank you so much, Robinson. You should see the reactions when you do this in a live audience, and sometimes a very hot conversation ensues between ladies and gentlemen when a suggestion like this one of Robinson comes up. He needs to get rid of 1 car. He needs to sell 1 car. Should cut back on a number of unnecessary expenses, such as paid TV, salon. They can work on a small apartment. Thank you so much. Wow, John needs to adjust all his expenses. Wow, they need to get rid of 1 car. Wow, thank you so much. Thank you so much. Thank you so much. I like the responses that are coming. And like I told you, we are all experts in financial matters. All right, but allow me to say a few things. As we pick some lessons from the story of John. The truth is that the story of John is the story of very many of us. Okay, very many of us behave like John in our different ways. All right. Sometimes it's easier to see what is wrong in the story of John, and sometimes we don't see what is wrong in us. The reason why I like using the story of John is because it has a way of beginning to awaken us, to allow us to ask ourselves, what exactly is happening in my own life? Okay. So allow me to just say a few things. Most of them you have said, from your responses. There is some touch of wastefulness, and very many of us also have a touch of wastefulness. We don't spend with so much thought, especially when we are able. But this evening, I'm reminding us to be very careful about wastefulness. Okay, there are those of us who cook food fit for 16 people when we are only 4 in our households, and we throw away the remainder as leftovers every day. We have wasted food for another 3 days in one day. There is a touch of living beyond his means. Very many people live beyond their means. Then there is a touch of living for others. Okay, there are very many people who make decisions to please others for fear of missing out, for fear of what they will say. And so we do things not for ourselves, but because of others. Then there is also the need for an emergency kitty. It emerged that time that John and wife had never saved anything, not in a circle, not anywhere. And so when these realities came, they found themselves exposed. So there's also need for us to think about a tough time that might come. There's also the need for flexibility when things get tough. There are some people who even come for the one-on-one session, but before I speak, they start by saying, Coach, I am willing to hear anything, but please don't touch my car. And that time they have 3 cars, but they're trapped in debt and they're struggling. So they are rigid, they've not accepted. Then there is also a touch of poor shopping habits. John is living in Roysambu, but they used to go and shop at the Junction Mall along Ngong Road. The good thing about John is that he was flexible. He was flexible. Him and the wife were very flexible. After the sessions that we had, when we did, I think the second review, I was amazed by what they decided to do. My work as a coach is not to decide for you, it's to just show you some of the options available. John and wife decided to sell 1 car, like some of you have said. They decided to be dropping John at work, and then interestingly, the wife decided to register the other car on taxi, on Uber, so that she can start getting some money as she waits to get another job in future. And that was working for them. When we talked about doing hair in Kilimani, out of her own volition, she decided to trim her hair when we were doing our review. By the way, currently, John and wife are doing fantastically well financially. I'm just mentioning some of the adjustments they made. They also decided to move from their 3-bedroomed house to a 2-bedroomed house of 25,000 bob. The point here is we also have to learn to be flexible. Ladies and gentlemen, according to schedule, the time that we have is done. But I want to believe in the many words I have said, that you have picked something that would work for you, that would work for someone else, something that probably would spur your financial story to a next level. If you've just been saving, maybe it's time that you begin to send your money, to call for more money. If you've been afraid of taking credit, maybe it is time for you to begin assessing how else can you relate with credit so that it can be useful to spur growth in your financial story.
Thank you.
Thank you so much. May God bless you. As we get into the Q&A session, I've already seen a few questions, but I want to return the mantle to the moderator as we go into that session. Thank you.
Thank you, Roy, for such an illuminating presentation. The questions are not very many, but I'm sure you can track them. There is a question from Dr. Ann Nganga. There's another one from Dr. Jackie Lichuma, Dr. Fanuel Ojwang, and then anonymous attendee has 2 questions. Let me just try to go back to that so that we can get the questions. Let me just adjust. We start with those ones first. Anne is asking, is there a problem with, for example, buying a better car from investments? You said we adjust our lifestyle after earning profits. What is allowable? Surely you invest to live a better life. That's Dr. Ann. I'll just read them, then you'll take that as the first part. And
Yes.
then Dr. Lichuma says, a number of financial experts say there is nothing like good debt. To prosper, one needs to prosper. Sorry, that question seems to have been taken out as I was reading it. I don't know what's wrong with that. Is there wisdom in clearing SACCO loan quickly as opposed to maintaining the agreed duration and investing elsewhere the extra income? I think I'll take that, please. When we loan you the SACCO loans, we are, as a SACCO, we are interested in the member servicing the loan as per contract. So if we've given you a loan for 5 years, please pay for 5 years. If you get some lump sum money, you can take them to government bonds, you can increase your deposits, but try not to retire the loan early, because retiring the loan early means the SACCO misses out on interest on loan. And when the SACCO misses out on interest on loan, the member will also miss out on interest on deposits and dividends. So let's try to, it is bad to default, but it is not helping the SACCO to retire the loan early either. So when you get a lump sum, you can look at other investment vehicles, but try to just service the loan as per contract. I think I needed to take that as I give Roy the chance to answer the first one by Ann Nganga. We are going through to look at the other questions.
All right, thank you so much. Whether there's a problem buying a better car. Actually, the reason even why we are creating wealth is so that we can better our life. My point was not that it is a problem to better your life from the returns. My problem was that we try to play in the game of wealth creation, but immediately we receive the first return, we kill it immediately. All right, we are supposed to have a little patience to allow the portfolio to begin to grow. There might be some smaller things we can do, or probably depending on the size of your returns, if a car would make sense at that time without jeopardizing your plan of wealth creation, it can still work. But the point here is we need to be careful about killing all our returns immediately, because again, with the passion of time and the rising cost of living and things like those, in the fullness of time, we might realize very quickly that the money we have been using to try and create wealth is also beginning to be rendered to have little power, by the forces of inflation and things like those. So yes, there is nothing wrong in bettering your life from the proceeds of investment, but you have to be careful not to be killing every result of investment, so that you have a plan that allows you to ensure that your portfolio is beginning to grow. There was a question, I had picked one, but there's another one I think we will need to pick. Someone had asked whether I do one-on-one on investment options. Yes, I do one-on-one on debt management, on investment, on general money management, on business, and on retirement preparation. So thank you so much. I don't know whether you have picked any other.
Yes, there can you hear me?
I've seen one. I've seen one. What is your opinion on real estate?
Yes, that one.
How does one go about deciding what works, and points to consider when picking on real estate, on the real estate to pursue? Right. This is a question on how to choose allow me, as I respond to it, to be a bit general also, to also just probably address all of us. When you think about investment, I like saying that, first of all, you need to ask yourself, why do I want to invest? What do I seek to get at the end of this investment that I'm thinking about? because not every option is good for everyone at any time. Investment is not just investment for everyone. So your reason behind wanting to invest, what you seek to get out of an investment, might easily help you to sieve out options that don't respond to your need for investment. There is someone who wants to invest because they feel their current income is a bit strained and therefore they want supplementary income. Therefore, they are looking for options that can be giving them periodic returns. Another one is investing probably for something they will need after 5-10 years, and so on, right? So it's important to think about that. Then number two, you also need to know your risk appetite. What kind of person are you? How much risk can you get? If you realize that where you have put your money, the returns you expected are about to, to be less than what you expected, how would you perceive it? Do you have a skin that can process the realities of the options you are considering? But let's come to real estate. When you want to get into real estate, you're asking yourself, what do I want to get out of it? And what side of real estate am I thinking about? Are you getting into full development where you are getting to construct, where you are getting to, to come up with rental houses or facilities, to get rental income? Or what exactly do you want to do? Or do you want to just buy, hold, and dispose later on? Either way, it will be very necessary for you to think about liquidity. Real estate is a very illiquid, investment avenue unless you are coming up with rental units that will be giving you rental income. And therefore, the money that you have that you want to invest in it, you have to look at it and convince yourself or remind yourself that this is not money I will be needing in a shorter period of time. You don't take money that you will need in 5 months or even 1 year and use it to buy a piece of land or to pump it into real estate, because real estate is capital intensive. But then it is not like mangoes. You will wake up in the morning and line them on the road and say, I am selling mangoes for people to just buy overnight. Sometimes you put your property on sale and it takes a long while. So think about the realities of liquidity that surround real estate. Think about location. Think about location, because there's something that we call negative returns, which is a reality in real estate. Sometimes, for example, a real case that I met, someone bought land near Runda. It could still be called Runda, but on the far ends of Runda, with prospects that this thing will be selling like this in the next X number of years. Then, with this was not anticipated, a slum emerged in that particular area. And therefore, cases of insecurity started happening. And that affected the projected returns that were to come from that piece of land, because now people were avoiding buying that last line that was touching that particular slum because of insecurity and, of course, other preferences that people will have. Very many people, personally, I have witnessed, I had a property somewhere where we witnessed negative flows of cash from rental property, and prices of units, we were forced to bring them down because of changes that were beyond our control. We put up a structure in a place where a university was coming, and we were anticipating that we'll be able to serve the student fraternity because the university was not bringing hostels. So we quickly set up some units, and then somewhere there was change of mind from the university. I don't know what happened. And so they were not coming. And very many developers had put up units. And we had even gotten some tenants. But a time came when tenants started moving out to look for cheaper units. And so you have a choice. For example, my units, I had units for 8,000, 6,000, and 5,000. The unit for 8,000, when the clients left, the next breed of clients that were coming were asking, you tell them 8,000, they tell you I thought it is 6,000. I thought it is 5,000. And they go and they don't come back. And that happens for a long time. You have a choice to either bring it down or keep waiting for when an 8,000 will happen. So it's a risk that investors in that place need to think about, in that avenue need to think about. But I hope I have mentioned a few things that can help you as you think about the same. Thank you so much.
Thank you so much. Our time is far much spent, but just a few questions. You will just be responding one statement. Dr. Ogaro, at what percentage of income is personal debt unsustainable? You'll give a one statement answer. There is anonymous attendee talking about overdependence. And then the other question, controversial. Is it advisable to buy a car in cash or loan? You will make a statement there. Dr. Okemwa, debt to income ratio, I think related to the same question by Dr. Garo. At what percentage of income is personal debt unsustainable? And then a very interesting one by Dr. Ndwati. Do you include debt in your will? Maybe in 2-3 minutes, then we'll hand the microphone to the group chair of the circle to close for us. 2-3 minutes, then the chair will take the mic.
All right, thank you so much. Thank you so much for these questions. There's a question of debt to income ratio. To keep it real, please stick to what is real to your circumstances. Of course, we have the 2/3 rule, for example, that dictates how much you can be able to borrow. But many times I say that rule may not apply to you because you know your own story. Sometimes the payslip says you have the 2/3 and you can access it. But why do you need this debt? And the reasoning behind it might tell you whether it is a debt that you can take or a debt that you cannot take. So a formula, a particular percentage might be a bit deceiving if we just approach percentages blindly. Is it good to buy a car in loan or in cash? It depends with the type of person. If it's a person who is afraid of debt, because I know people who shiver when debt is mentioned, for them, they'll say cash works for them because they don't want pressure. However, if you are wealth creation conscious, instead of buying the car in cash and you have the cash, you can then put a down payment. And if you have another use for the cash that can generate money to help you as you repay this particular loan, then it makes bigger sense that way. But again, to each their own, depending on the type of person that you are. Do you include debt in your will? I think it would make sense to also just indicate part of that, because sometimes some people might come to make claims that probably may not be substantiated, and the people you left behind maybe do not have records. So maybe I personally, I feel it is necessary to also just include a statement on the same. Thank you so much.
Thank you very much, Roy, for a wonderful presentation. I'm sure it's been engaging.
Sorry, that was sorry. The last one, the question on overdependence. Can you avoid debt, especially family burden? Avoiding debt, you can avoid debt depending on your circumstances and also depending on what you want to use the debt for. Family burden, I feel you on the family burden. Just that we don't have time. I wish you can inbox. I can give you some response, because part of why I got messed up is also because of family burden, but I can share with you a story on how I was able to address this particular bit. Then I will also share a link to our book catalog with the office. They can find a way of sharing with you. It's a WhatsApp catalog that you can be able to make your interaction with the books and your orders, and then we will be glad to respond to them. Thank you so much.
Thank you very much for such an interactive session. As for our members, as always, we invite you to patronize the KMS Circle Limited products. Both we have our a full range of products, including in insurance, including in how to acquire land safely, something we've been doing for some time. So I'll give the mic to the Dr. Kennedy Koech, the group chair of the society, to make closing remarks. Thank you.
Yeah, thank you very much, George, for excellent moderation. And I want to thank our main speaker, Mr. Okonji, for such a stimulating presentation. I think members will agree with me that this presentation has been done in in a very excellent way by somebody who seems to have also had the same experiences. So I know that when somebody shares some of the things that they have gone through, it makes more sense, and it really speaks to us. I want to thank the members for participating actively in these webinars, and I would like to urge them to continue patronizing the products of the SACCO. This SACCO is yours, and we must all grow it. So thank you very much, and I hope to see you again in the next webinar. Thanks, everyone, and have a good night.
Thank you. It's a CPD accredited activity. You will get your CPD points, and you will get the recorded presentations via your emails. Good night. Enjoy the rest of your evening.